Welcome, real estate investors. Thank you so much for joining me today. We have a great topic to cover. It's kind of a topic that shows up all the time when you're doing multifamily deals because these are larger, usually bigger deals, require more money. More money is because they're bigger deals, and because of that, you need to raise money. So we're going to discuss raising money and who you can get it from, and the process that it goes around to do that. Also, some little tidbits in there on some effective strategies to get money from people, especially if they're like using like an IRA. So if you haven't done already, please like, comment, and subscribe. This helps you out. This helps me out. This helps the whole world out. The activity is what creates the economy, and so you supported my content. I really appreciate that, and it definitely helps me continue to stay motivated and proceeding on and creating more content for you. So thank you so much. All right, raising money. So there's a couple people you can raise money from. The first and foremost is friends, families, and other people. So this is where mostly people start when they're raising money. And if you're not surprised, you might be surprised or you might not be surprised. But these people are usually the people that give you the most hassle about when you raise money. They could be the easiest because it's you already have a relationship with them and they know you and they usually like you, right? But they might haggle you down with your acquisition fee and might ask you to explain your acquisition fee. So then you're talking about explaining the acquisition fee, and they're talking about how much it is, and they want you to justify it. And trust me, you deserve that acquisition fee because you were taking your time to build the relationships with the people you need to build the relationships with, to get the deals, to find the deals, to travel and use the and expel the expenses that you need to get the deal, and spend all the time chasing loose ends and all of that factors and all the time out of your life to do the deal. So the acquisition fee is justified and you definitely deserve it. And they also might be hounding you at Thanksgiving every year saying, it takes 5 to 7 years to get my money back, and even though it might take 3 to 5 years, and it gives you all these hassles. So that's one thing to keep in mind when you're raising from friends and family. But it's a great funding source, and you can definitely do it, and whatnot. Now, keep in mind, if you're finding people that are not getting it, or you're talking to friends and family and they're just beating you up too much, or they're not really receptive to it or whatnot, just think in your mind what's next, because you don't need to who's next, because you don't need to worry about trying to justify yourself constantly about with someone who doesn't understand acquisition fee, doesn't understand how these syndication deals are put together, doesn't understand the market, doesn't understand all these things. It's going to be so much more headache for you in the long run. And so you want to be finding people who say, hey, that's interesting, tell me more about the deal. And that's who you want to be going after. So after friends and family, some of the people you can go after are angel investors, right? Angel investors are great because they have experience doing these deals before, so you're not going to get as many of the headaches as you would with friends and family. They get what's going on. They're experts in the field, so they're usually high net worth individuals that will invest $50,000 to $5 million in your deal, and for that they expect usually a cash on cash return of 7 to 10% in the first year, and then a 20 to 25% or higher annualized after the resale of the property. So that keeps you in mind. So a 7 to 10% return on their money in the first year. That's usually from the monthly distributions, and then an annualized return, of total return of 20 to 25% once you resell the property. Now, and for that they expect that you use their money for the 5 to 7 years. They're totally cool with that, which is great. So if you want to meet these angel investors, you can go network at your local real estate events, pitch your ideas there, showcase successful past projects, which helps build credibility, and that will help you attract more angel investors to your business. There's also a factor which you want to keep in mind, is that when you present to angel investors, you want to present a business plan. Now, a business plan is going to showcase all the things that you are considering with your business, maybe the markets that you're going into, and all kinds of stuff. If you have never done a business plan, you can research business plan at bplan.com. I think that's the business plan website. There's also other tools online of just finding a business plan and going from there and creating one for you. You also want to provide a property package package. And this property package outlines the deal terms, the current and projected financials, as well as the demographics of the city that you're in, as well as any major facts about the property or grievances or issues, with the property. You definitely want to not paint a rosy picture here. You want to be honest and accurate about the downfalls of the property and the risks associated with it, because you don't want an investor to come find you later on down the road and say that he or she would not have invested in your deal if he or she would have known about the issues presented, the risks associated with the deal beforehand, or the issues with the deal beforehand. That's just going to complicate your life, and that's not what you need. So transparent, open communication is super important for that. It's also important to make sure you understand that when raising money for these deals, it is a security, and it's regulated by the Securities and Exchange Commission and regulators in all 50 states. So you definitely don't want to have any issues with that. You want to make sure you have a good securities attorney on board of your team that you specialize. It will cost you some money up front, but it's important to have that because it just protects you in the long run. Make sure you're doing things accurate. Now, when you're raising money from people, you're going to come in a situation probably pretty frequently. We'll go into I follow and that's an IRA. And I follow a guy, a prominent investor called David Lindahl, and he's raised over tens of millions of dollars, and 42% of the money that he's raised has come from an IRA. And so you can expect roughly that half of your money is coming from an IRA when you raise money. So what is an IRA? It's an individual retirement account, and these are retirement accounts that are tax deferred for people who have them, and people usually put money in these accounts. They're like 401ks, put money from their job or outside investments. They're allowed allocation every year. I think a certain amount per year to put into the account, and the money grows tax deferred until you're retired. So these are great investment vehicles. And when you're in the process of raising money from people, IRAs show up all the time. Now, one thing to keep in mind with self-directed IRAs, which is what you care about and you want to educate your consumer or your person, your investor on, is that self-directed IRAs, the self-directed IRAs, the right ones, allow you to invest in real estate. There's really broad regulations around this, and it allows you to invest in real estate and do deals like we're talking multifamily syndications. But if people don't know that, it's because the brokerage firms that they're talking with, they don't give them the option. If you called up your brokerage firm or your bank and you asked, hey, can I invest in real estate in my IRA? They'd probably laugh at you, or say of course you can. But the truth is, it's kind of like your mom putting you a kindergarten in a sandbox and saying these are the only toys that you can play with. It's the same thing. So when they put together their IRAs, they only put together the investments in that IRA that make them the most money. And sometimes, or a lot of times, it's not real estate. So you need to educate your investor on this and say that there are other IRA companies out there that allow you to open self-directed IRAs. You could roll over that money, and that allows you then to invest in real estate and really capitalize on the great returns and advantages that real estate offers you as an investor, right? And so it's important for you to understand that, because a lot of people are going to thank you so much for communicating that information to them, because they didn't know that. They didn't know that their current IRA wasn't up to snuff, and that they didn't have all the benefit options they had. Even if they are in a self-directed IRA, the IRA usually only gives them options to self-direct their money into things that make them the most money again. So it's not all the options. You want to make sure you find the right self-directed IRA companies, and you, after talking to one or two of those companies, you can get all the information you need to educate your investors on a self-directed IRA, and getting that money from the person that you need to raise the money. So there you have it. These are just a quick overview on how to raise money from friends and family, angel investors, and using IRAs to get money for your deals. We'll be discussing all kinds of things in the future videos, and we'll probably go into the deep dives about additional strategies from raising money, different techniques and all that kind of stuff later down the road. But in the meantime, happy apartment hunting. Your fellow multifamily real estate investment expert, Connor S. McCarl, out.